Do you hear that? That's the sound of my punishment for not recording this video when I was supposed to. It's funny because it just doesn't stop, right? Every time I start talking or recording, somebody finds a pair of cymbals and a drum set that we don't even own and just starts. The vacuuming and the kids playing with cups will end eventually. How are you guys doing today? Good? You come here to hear the real estate news? My family doesn't care. Hey everyone, welcome to the latest installment of What the Heck Happened in Real Estate, the show where we look at the most important and interesting stories to come out of the real estate world.
The stakes are high in these midterm elections, but it could be days before we know the outcome of some key races.
In 49 minutes, I would say. That's at 7 o'clock. We're going to have a bunch of poll closings in some of the states and districts where the polls close at 7.
There were major developments overnight in the balance of power.
One of the supreme ironies is that if you add up the number of seats in which Republicans are now leading and the rest.
The question I always get on a day like this is, what do you think is going to happen? Well, of course, we can't say for sure.
Right. So if you haven't heard, there were some elections last week or something like that. I'm going to guess that if you watched the news at all, that's almost all of what you saw. Well, believe it or not, the real estate market continued running despite none of it being covered, understandably. Our biggest story? Inflation has finally started easing a bit after interest rates have more than doubled this year. This shows signs of hope for a housing market that has already started to feel the effects of all of these drastic rate hikes. As I mentioned last week, the mortgage payment for a $250K home today is the same as a $400K home from January. These rate hikes have caused a lot of buyers and sellers to pause their real estate dreams this year. You know what? Actually, I want to stop the news here for a second to address something that I've been hearing a lot. Personally, I'm sick and tired of hearing the line that interest rates are just going back to normal. Anyone who says this isn't giving you all of the information because it's usually followed up by some kind of a comment about, I remember when rates were 10% or 15% and that was good back then. Well, Bob, the problem there is that when rates were 15%, a home was only $69,000. So yes, rates being above 7% is historically normal, but an average home costing $400K is not. Rates have been too low for too long, and now home prices have adjusted to reflect that. It's been 21 years since rates were 7%, and back then, a home only cost $170,000. That's less than half of a home today. So, prices have more than doubled, but, and I hate to be the bearer of bad news, household income has not. So yes, even if 7% rates are normal, it doesn't matter. The average mortgage payment in this country jumped from $1,200 to $1,900 in less than a year. Homes have literally not been this unaffordable for the average family since 1986. Oh yeah, inflation. So I mentioned that the U.S. inflation has finally started curbing. While this is great news leading into 2023, we're still nowhere near the Fed's target inflation goal. This is happening in tandem with the good news that the U.S. job market report came back strong, even as many of the major tech companies start laying off tens of thousands of workers. Now, you might hear all of this and think a market crash is on the way. But it doesn't appear to be that way, at least not in the residential real estate world. The average amount of equity in an American household today is $300,000, and many of these people have rates that are below 3.5% or even have their home paid off. This means that most homeowners are not in a financial crunch and have decided to sit put and wait for all of this to end. This has lowered the number of new listings coming on the market, which means supply is lowering with demand. This is causing real estate prices to drop slowly in some areas and even stay stagnant in others. Plus, whenever the U.S. economy goes into a recession, lower interest rates tend to follow. All of this combined has led to the top real estate companies in the country to predict that home prices will end next year anywhere from down 5% to even up 2.5% or averaged at 0. So, what do you do going into next year if you're planning on moving? Well, it's important to analyze why you're moving. Everything is extremely circumstantial right now, and actually hiring a realtor or a company who's great at what they do can be the difference between making or losing tens of thousands of dollars in this market. Trust me, I see it every day. To add on to that, despite affordability issues for many buyers, there are still a lot of great opportunities and reasons to move. One, for example, being if you're one of the many homeowners with a solid equity position who's moving due to life circumstances, like if you had a baby or you can't do stairs anymore, you need to move for work or family, the market right now shouldn't stop you. Since you already own a property, it doesn't matter whether the market is up or down because you're selling and buying your home in the same market. Plus, I always say, real estate is the only investment that is also the place you live. And with record high rent prices making renting a poor option, owning is still technically the way to go as long as you're buying long term. Real estate has always outperformed inflation, meaning homes are likely to become more and more unaffordable in the decades to come. This has even led to some bold predictions, like in 20 years, owning a home will be a luxury for young people and not a common expectation. So think ahead. You just need to be more strategic with how you finance, what you offer, and who you work with. Lastly, on a lighter note, as we head into the holiday season, you could own a piece of Christmas history because the home from A Christmas Story is up for sale. It comes with multiple buildings on a 1.3-acre lot, including a museum and parking lots. It's been renovated with antique appliances and other wall-to-wall anecdotes, and the best part is not only are buyer letters welcome, but the seller specifically wants buyers to write a theme about why you want to own the Christmas Story house. That's all I have for you this week. I'll see you guys next week with all the latest stories. Take care.